Welcome back to the morning show here on Arise News. For updates, business updates from around the world, Rotus Odiri joins us. Good morning, Rotus.
Good morning, Ayo. Good morning, Doctor. Good morning, Rufai. Good morning to all of you.
Welcome to a
new week. Yeah, oh man, really tough. But Djokovic and Onjabor, both players are supporting, so it's a tough start to the week, but we'll make it through. There's lots to look forward to this week as far as business is concerned. You've got the G20 meetings today, tomorrow in Gujarat in India. You've got more U.S. bank earnings tomorrow, BNY Mellon, Morgan Stanley, Bank of America. We'll go through Citigroup, Wells Fargo, and JP Morgan in a moment. UK CPI, I think 8.7%. They're seeing some more cooling coming forth year on year, but still pressure on the Bank of England. A very interesting Bank of Turkey rate decision. We've been going in very unorthodox means over there. CPI Friday in Japan, we'll see what numbers come out with that. Asian stocks this morning were down, mostly because of weak data, GDP data coming out from China. We're still seeing a lot of weak data there. Japan is closed because of a holiday, Japan's markets, and I think there's a typhoon warning in Hong Kong, so the Hang Seng not reporting today. But here's what was coming out of China. Again, missing estimates. Second quarter, 6.3%. Estimates were for 7.1%. Retail sales also underperforming slightly, so that's a metric on the average Chinese consumer. Although industrial production did beat estimates, but still down from where I think it was in May. FAI is fixed asset investments. That's also coming in slightly above estimates. But the general, issue is that China's coming out of the COVID lockdowns, there's still some struggle there, and it is impacting a number of countries, even impacting oil prices because of demand, impacting nations like Singapore, China's largest trading partner. We went to their GDP figures last week. So India is pushing for excess profits on multinationals. They're going to push for that. I think Reuters was reporting that. They're going to push for that today and tomorrow at their meeting. Basically, if you, as a multinational, you earn, I think it's $22 billion in revenues. If it is higher than that is, I think, 10% annual growth. If it exceeds that, then it exceeds as excess profit. So they're looking at the proposals put forward. I think it's a 15% minimum tax. And then another 25%, I believe, as excess profits. And India has muscle to flex because, they are projected to keep growing, overtaking China as the largest population in the world. Apple has gone over there to open up new stores. So, of course, they're going to want to tax profits on multinationals that are doing business in their country because they're getting, more and more prolific and proficient as far as the global economic landscape is concerned. And so we move from that to earnings. JP Morgan, Friday, beating estimates across the board. You're seeing double-digit growth. Look at that. Net income, 67%. Largest bank in the United States, beating estimates. Same thing with Wells Fargo, though their margins were, I guess, to a smaller scale than JP Morgan. Rising interest rates have helped a number of banks in the United States, although when you look at what it means for costs on the other side, that also has impacted them. Okay, so Wells Fargo as well, beating estimates, $20 billion revenue, 20% growth, net interest income, which is an important metric, the one in the middle for the banks, and in terms of the difference between the interest you pay out on deposits versus what you get from loans, and then their net income, 57% growth. Citigroup didn't do as well. They were impacted by layoffs. They were impacted by not as much. Their deal-making, mergers and acquisitions, investment banking wasn't as strong as JP Morgan and Wells Fargo, so they were impacted a bit. Revenue down 1%, net income down 36%, but they still beat earnings estimates. So we'll see more again in terms of what the other U.S. banks will be coming out with. Very interesting here. We're seeing more unwinding of the prior regime of the central bank. So they are cutting. This is now to Africa now, Nigeria. CBN cutting, I think effective August the 1st. Cash reserve ratio to be cut to 10% for merchant banks. Okay. I haven't yet to see this on commercial banking side, but that cash reserve ratio has been used as a money supply or money control mechanism, but it has not worked, right? In terms of where inflation is. So that's we should see that hopefully flowing through to the commercial banks as well. Then finally, we're getting inflation numbers later today, hopefully from the Bureau of Statistics, maybe about, I don't know, within the next couple hours or so. This is prior month, May, remember, it keeps rising, 22.4%. Now we are in a period where June is going to reflect where fuel subsidies were removed and also the rise in cost of goods. So with this number should rise. I mean, we should see a bigger rise in inflation.
So I say not completely. You know why? Because probably all the people that still had petrol in their tanks still pretty much exhausted throughout that period. And I think it's only yesterday or day before yesterday that some people started to lift at new rates into the market.
The new stock?
The new stock, yeah.
It's still going to rise, though.
Yeah, it's still going to rise.
The pressures are still there.
The pressures are still there. It's still going to rise. But you can't really use us as a pair with that because some people still had, carry over of the last stock and some people still had fuel in their car.
We'll see the numbers now.
So maybe preceding months, then you will now see the full impact. But it's still going to rise because currently, now in trickles, vessels are already coming in that are bringing PMS. So maybe one or two vessels, some vessels are landing. I also checked the website for the shipping and all of that. But let's see how it pans out in the coming days. But prices are going to rise.
Yeah, it's going to rise. It's going to rise.
Just about China, post-pandemic reality is not as positive as the leaders had thought. Just not long ago, the youth unemployment figures was released, and it's hit a record high, 21.3%. And put that with the fact that demand for Chinese goods have reduced. They have the housing crisis, the real estate crisis, which had contributed quite significantly to the Chinese GDP. And so the big question for a number of analysts and watchers, especially with China, is what is the government not doing? Because, they've put in a lot of policies in recent times, cut interest rates last year, just so that they're able to increase spending. But this hasn't yet hit what they wanted to hit in terms of the 5% GDP growth that they're looking forward to in terms of this year's target. So perhaps the question I'm asking is, what can they do, or what are they not doing right in China post-pandemic to shore up at least trade? And of course, when I was looking at this story, I also looked at the fact that there's still the trade war with the US. Perhaps that's why they are softening a bit in terms of, trying to extend the hand of, trade friendship to the United States.
Yeah, so it's stimulus. What is being asked of the People's Bank of China is more stimulus for the economy. They haven't really done much other than cutting deposit rates in order to try to spur more activity in the banking sector. But the real estate market still needs a lot of support. In fact, I understand that some news that already broke early this morning, there are chip makers that are going to lobby the United States to ease up on those export curbs on chips to China in order to try to ease up on, try to improve relations. Janet Yellen is also, I think she's part of the G20 as well, also calling for more, better relations between US-China. So, but the main thing is that China needs to inject more stimulus into the economy. That's what they want. They are yet to do more, which is why the markets are reacting.
What you guys don't talk about, China has a huge debt problem. That is a big problem for China too.
Yeah, but, to some extent, but not as much as the US and other countries.
By way of update, you are going to talk about Microsoft and Activision.
Oh, Activision. Well,
the FTC, they lost their appeal.
They did.
Friday. So paving the way as we had suspected, for the sealing of that deal. And now Sony has had to sign the Call of Duty license. So after 18 months of protracted battle back and forth, now looks like the acquisition of that
will go through.
Yes, will go through.
Yeah.
What remains is the CMA, the regulator in the UK, and also, Microsoft is looking in that direction, but they've not fixed a date yet for the resumption of negotiations. But perhaps our suspicion is that it will probably follow the same pattern as we have seen in the US and also elsewhere in Asia. But I was going to go back to the point about the CRR.
Yes.
That has now been reduced from 32.5% for the merchant banks to 10%. But you are skeptical about it, and what we're told is that it will increase more opportunities for these merchant banks to lend more to the real sector. Yeah. And some commentators appear to be positive about it. In fact, so much that some stakeholders are even saying that the same CRR should be reduced for money deposit banks.
Correct, yeah.
So that means that they see some value in it because the assumption is that it will cut interest rates. But What's your skepticism based on? Because it didn't work in the past, you think it will not work this time?
It didn't work to curb inflation. And you know, that time they were sterilizing funds. So now you're releasing more money, even more money supply into the market. So hopefully, to your point, yes, it should hopefully improve lending. But my fear is by releasing more funds into the market, into the money supply, there's the issue of too much money chasing too few goods and how that impacts inflation. So we'll see how it goes. But the banks will like it. The banks will like it because that money wasn't earning any interest. It was just sitting in the central bank vault. So yeah.
Anyway, thank you very much.
Thank you so much.
We'll see you tomorrow.